Howdy, everyone. This is Tyler Coates with the Daily Alpha Analysis live stream. And today I'm joined by a very special guest, Mr. Bitcoin Bernoulli, who has been somebody I've been getting to know over the last few years. And that is, I think, one of the good things of the bear markets is you kind of really get to cement some relationships that are, maybe tentative in bull market environments and become more real when you really experience some, the depths of that, parabolic cycle and then that following correction, which is extremely trying and is what will really, test you to see if you're able to stick to your analysis and if it's any good and if it's something that you're going to be really committed to in the heat of the moment. And that was one thing that I really picked up from definitely from Fibbo Swanee and Joe Saz, somebody guys who I've been doing weekly streams with, and also Mark Wood, who was a recent guest on the stream, who has traded very well throughout the recent years, and have somebody else here today, Mr. Bernoulli, who has been sharing the types of charts that I really like, the ones that you have to, they only really matter for kind of a short, like the really long-term charts, the long-term cycles. Think about the log parabolic channel that I have shared on this channel, where when you kind of get down there and test it, it becomes a thing that may be very, very important, but it's something that's very, very easy to forget about by the next time that you kind of get up towards the other side. It might take years, and you have to be able to not only trust that analysis, but still, know when to kind of pull it out. And Bernoulli's been, he's had this chart that has been tracking the market cycle of the Bitcoin kind of parabolic fractal relative to Litecoin, which first of all, I think is, a really good way to look at the overall market, as Litecoin was one of the first altcoin to gain some market cap dominance. And that very much did change the dynamic. Like before there were any altcoins and there was just Bitcoin, it was different than when all of a sudden now there are altcoins that draw in some market exposure. So for me, I pay very, very close attention to the long-term parabolic fractals, whether it be a hyperwave or a parabola or a log channeler or anything in between or outside of that. And I think that using that sort of approach with a Bitcoin chart and a Litecoin comparison to really get a feel for where we're at in the macro environment is, like I said, just going to be the type of thing that I am going to first be intrigued by, and then just kind of see, is this something that is still important in a year, 2 years, 3 years? And if it is, well, all right, let's really start paying attention to this and maybe start paying attention to some other things that this guy is saying. So definitely appreciate the analysis that you've been sharing, the work that you've been doing in Telegram. And I'm very interested to see what you're thinking about today's environment. So long introduction. And with that being said, how are you doing tonight, Mr.
I am good. I think I got as many charts together as I could. I'm glad that, when I first started making these, I didn't really know if anyone would have any interest in them or get anything out of them. I think as we've gone forward, it's funny, you said like the oscillator nature of Litecoin, as it relates to the Bitcoin cycle, is it's proven itself fairly useful as an indicator over time. So I'm glad you like it, and several other people. I talked to Mark Wood a lot. It was cool seeing him on here yesterday. Though, so I hope none of my material is redundant. But for a few things, I was like, oh, great. Now what am I going to talk about tomorrow? Because Mark's talking about all the stuff. No, but I've got, so I figured I could, go through here. My background's in engineering, so I tend to just look at data and trends and approach a lot of it like I would any sensor data from machines, race cars, etc. Just try to identify trends that can be used to identify what to expect going forward. That's kind of what data analysis is about. So that's been my approach, and I've started enjoying it more and more, especially when it comes out helpful and accurate.
Well, that's for darn sure, and I think that is very much been my experience as I started in this space myself. I mean, there's a million people out there posting charts and doing this and that, and not many people are getting any attention for it. And as you say, when you kind of start, it's just like you're just really not sure if anybody's going to care at all, if it's going to get any attention, and if you do, if you can start posting some charts that are very important at some very important times, and really standing firm with that analysis and based on objective indicators that are consistently being used. And that's over time, that's when people start to kind of pay attention, specifically when markets do things that they maybe don't expect, whereas it lines up with something that you were expecting. That's where people definitely become interested. And Mark is definitely a tough act to follow. He's somebody who's always got a wide arsenal of charts to take a look at, and a wide arsenal of indicators as well. But you're somebody who looks at charts in a unique way. It's one thing to be able to effectively use objective indicators in important times and do that well, but it's another to have a completely unique chart that is based on something that is entirely original. So that is what I'm most interested to talk to you about is the chart that you've been looking at there with Litecoin and Bitcoin. But certainly we'll be interested to dive into any more charts that you have. So we can go ahead and get into it whenever you're ready. I'll make sure that the screen share is enabled, and was also just having a flashback to our time at the all-time high party. So shout out to Bernoulli for joining at the beach house in Florida. That was really a lot of fun, and something that's really, really cool about this space is you get to know people online. Like Bernoulli is somebody who I got to know kind of in this fashion, talking on a Zoom or on a Telegram or something like this, and you really get to have some very personal relationships with people, specifically when you go through these traumatizing capitulation events and euphoric tops or whatever the case may be. And then actually getting to meet in person is really kind of cements that all of those chats that you've had, you kind of been thinking, yeah, this is the guy that I like and I'd like to hang out with. And once you get to hang out with him, oh yeah, for sure, this is who I thought he was. Guy showed up in an RV parking out front of the house, showed up at 3 a.m. after driving all day, and immediately knew that this was the type of guy who I definitely wanted to be spending some time with. So thanks for joining there, and that was certainly a lot of fun.
Yeah, great times. Definitely a longer drive than I expected. Don't ever think you can make it from South Florida to the Panhandle don't ever figure less than 12 hours. It's a really far drive.
All right. Well, let's see what you got for us. I'm sure everybody's excited to look at some charts after we've been kind of testing that 50K water and starting to get a little bit of a reaction. Interested to hear what you're seeing.
All right. All right. I figured. Can you see my screen all right?
I can't see your screen. It's
Yeah, it's impossible to
stuff on
read.
top of each other. Yep.
Right, exactly, and that's so that just as a quick example, this is my fully annotated and developed chart of the cycle you were referring to that uses Litecoin as an oscillator. But how do I move this thing? There we go. All right, let's begin at the beginning. So as you can see here, I've got like the Litecoin versus Bitcoin, that's LTC BTC, plotted on a weekly time frame over, it's unfortunate. The longest data I can find on Litecoin is from Bitfinex, which is it's not my favorite exchange, that's for sure, but they seem to have the most historical data still.
Is that longer than Poloniex?
I believe it is. Which it's weird. It doesn't make sense because Poloniex, I believe, has had it listed for longer, but I can't find the data in TradingView, so we get what we get. And
is there ever? Sorry to interrupt you, but I mean, has there ever been a worse name for any business than Poloniex?
Places that are called Honest Bob's, I just don't trust them. If they have to say they're honest in the name, I'm not buying it. It seems like a
talking to the honest analyst.
but yeah, Poloniex, it's a little weird.
Well, all right, touche.
So the way this whole theory and method really started was, it was in 2018. In this area, somewhere right around the big breakdown from 6K that happened, that panic, and I that's where I was looking at Litecoin, and I felt that it behaved like an oscillator, and like the prior data could be used to on a repeating wave to predict future behavior and important dates, important points in the Bitcoin cycle. And so I started developing my chart and around that, and what I really did is start laying out periods. You can see over here, we've in the beginning on Litecoin, we've got these two major spikes and a later smaller spike that happened. So and around the end of 2018, November, December, I started looking really closely at the data, wondering if this behavior would repeat. So I started labeling what I call periods, different periods of price action, and I was looking a lot at the halving dates at those times. You can see here the blue vertical dotted line is the Litecoin halving. The pink vertical dotted line is the Bitcoin halving. And it might not be the best system, but this is the system I ended up with, where I assigned letters, and I actually started with H right at the halving of Litecoin. And I just started identifying different trends and patterns that had repeated between the first Litecoin oscillatory cycle and the second. And I wanted to see
let me stop you there, because that's one thing that I find very interesting myself, and something that maybe you'll agree with, but I'm not sure if I've found anybody else to agree with it. That run-up that we saw in 2019, where Bitcoin went from $3,000 all the way up to $14,000 in a very short amount of time. That was something that'll, like, most people will say that it was, I don't even know the name, like it was like Filecoin or like some altcoin
dumping something coin scam. Yeah, there was a scam in China with some coin,
something like this. That's exactly. Yeah, so that's what they will say. Oh yeah, that's definitely what happened here. Whereas my opinion is that what led the whole market out of that bear trend that we saw, that took it from 20,000 down to 3,000, was Litecoin's halving. And the reason why I firmly believe that is because of how it responded to how Litecoin responded to its halving, with a big move leading into its halving, with how during that period in 2019, Litecoin outreturned basically every other alt that I cared about or was looking at. And because it was leading in terms of, if Bitcoin moved from 4 to 5, Litecoin was tending to move like, minutes or hours ahead of Bitcoin. So I'm convinced that 2019 move didn't have anything other to do than Litecoin halving. And once it gained some momentum, Bitcoin followed, and then the whole market did as well. What are your thoughts on that?
I tend to agree, and I think it was Plus Token was the name of the scam that everyone attributes that rise to, and yep. I definitely agree with you, and that was what helped. A lot of friends that I've made and traders started paying attention and encouraging me to develop this chart further, because we did see the leading nature of Litecoin in the moves. From days to hours, it would move before Bitcoin did. And I think you're right. I attribute a lot of that to the halving. And people
right. Days.
Sometimes it was days, and that kind of reinforced what I was working on with this chart. And
okay, I'm glad to hear that you're there. So right now it looks like we're kind of in stage D of what you're looking at. Am I?
Yes.
Yep. So that's explain stage A, B, C, and D.
So, well, quickly here, where we were just referring to, this run up that happened before this Litecoin halving, that was where I really became convinced, because that was that third bump in Litecoin that corresponded to the same G and H period back in when was that 2015, and so that really reinforced it, and I was able to fairly accurately predict this rise in Litecoin and simultaneously the really kind of the end to the Bitcoin bear market. So,
and that absolutely, I'll just confirm that real quick, and that's where I myself start to become interested. And a lot of people can post long-term charts, and some can keep posting them year after year, and then after predicting accurately a big market cycle like that just caught a lot of people very much off of guard, me included. That's when I definitely start paying attention. So that was great to kind of follow that, and it'll be definitely interesting to see what's happened since then from your perspective on this chart.
Definitely. And the first really major confirmation I got, I developed it all through the area of period H, GH, and then flip back to A is how I ended up naming them. The names don't mean anything. They're just to differentiate between periods. And the first real confirmation I got, I had predicted approximately a 30% rise in Litecoin versus Bitcoin, based on that should start at the end of period A and go up 30% or so. And I know it looks like this doesn't line up, but it's because it's a line chart. And it's based on the closes of weekly candles, but in reality, this if you look at this as a candlestick chart, this is accurate. There was about a rapid 30% rise in Litecoin versus Bitcoin in what I labeled period B, and all I really did at that time was project these dates forward, one after the other, the same number of days, and let's see, where are we? And I predicted that at the end of my period A, there would be a 30% from the beginning of a rapid rise. There'd be a 30% rise in Litecoin versus Bitcoin. And it's interesting that that rise actually ended up going 48%. So, the predictions I can come up with of, actual price targets are not terribly useful. I'm not going to ever be able to help anyone get out at a specific price, but think as, anyone who knows trading pretty well realizes, in a lot of ways, timing is more important than price. And if you know when a move is going to happen, you can be prepared for that, and then you set your own parameters for when to get out of that trade, etc.
Let me just reiterate what you just said, because I think it's really, like, for me, the most important realization that I have come to in trading, and it was also the hardest one, that everybody talks about up or down, and what's the price target, where is it going, up or down, and really focusing on the time target, or the timing cycle, or it's only price and time. That's it. Price, time, and
absolutely,
everybody puts maybe 80-90% to 100% emphasis on price, whereas I really think 80 to 90% plus should be put on time. And you said that very quickly and very well, and I just didn't want to let it get brushed over in that. I think what you said was that anybody that knows trading well understands that the timing is more important. And I just really wanted to reiterate that those that are focused mainly on timing, like I'm going to hold for 10 years, or I'm going to hold for 18 months after the halving, something along these lines, and then just say that I have no idea where the price may go until then, and maybe it'll be lower at that time, but I'm going to focus on that time aspect over the price aspect. I really think that is a tremendous edge to be gained, and would strongly encourage anybody listening to consider how much do you focus on the time aspect relative to the price aspect. So great point, and go ahead and continue.
Yeah, definitely. So going forward here, we can see you may remember, when we were hanging out in Vegas, it was around that time I really I'd gotten all the confirmation that to really start believing in this cycle and this approach to looking at these different periods of price action. And you can see the gray lines that I squiggled on this chart for both Bitcoin and for Litecoin. Of course, and it was just a hand scribble, just a general trend, but you can see they're actually fairly accurate. The behavior is accurate, and I drew those right at the end of period B here, which was that there was a 48% pop, and then a fall and a continued downtrend in Litecoin. And it's interesting because I really was starting to be vocal about this back here in February and March of 2020, and it's interesting because in the prior Bitcoin cycle, it was totally different behavior in this area around the am I looking in the right spot? Yeah, and it was really, so all I'm getting at is the COVID crash here in March of 2020. Crashed the stock markets, everything. Everyone finally panic sold everything, and you can see that was a fairly significantly different behavior in the price of Bitcoin, but the price of Litecoin actually did pretty much exactly the same thing. I could speculate all day about the reasons for that, fundamental or just FOMO hype otherwise, but and that's actually a good example of why I have found the kind of simple oscillating nature of Litecoin versus Bitcoin to be a good indication of the time cycles.
So what are you currently looking at for a time target for the next top of Bitcoin?
So based on this chart, and it's, you know, the top in Bitcoin, I think, is one of the hardest things to predict. The timing of the top is hard to predict. It has not been consistent between cycles. And that's where, so that's kind of what I was getting to, is based on a lot of different ways I've looked at these cycles, I feel pretty strongly that the two most important dates in defining the behavior of the oncoming cycle are the absolute low of the cycle. You know, in December 2018, that was what, around 3,120 in Bitcoin. And then the other important date is the date when we reach the prior all-time high.
Okay, so I guess maybe I was misunderstanding you. You mentioned that this is a chart that's most important for timing the market, and what you're saying is that it is not something that you would really rely on for timing the top of Bitcoin, but it's something that you really look at for timing the bottom of Bitcoin, and also when Bitcoin reaches a new all-time high. Is that correct?
That is correct. Yes, thank you for clarifying that. That is correct. And it definitely gives me a projection or an idea of the time frame where all-time high is likely to happen, but we also kind of need more data. You know, it could be validated or it might not.
Right. Which is, you know, whereas this is a very immature market, and that's the thing. People that really like long-term charts, it's not perfect. It's not a good environment for that when the oldest chart is about 10 years, and you know, a lot has changed in the last 3 to 5 years. So it is, you know, very much speculative to be basing too much long-term predictions off of prior cycles. But at the end of the day, it's all that we have, and it's all that we can do, and whoever is going to do the best at that is, you know, maybe going to give themselves an edge. So I appreciate you saying that, and I very much agree. And so far, you know, what we've been seeing over the last couple of years, I think that it's definitely been, you know, getting some good validation, and there isn't, based on the time history that we have there, you know, we definitely need more, but it's tough to have much more at this point at the same time.
Right. Absolutely. Yeah. So here I can kind of illustrate a little bit better what I was just describing. You can see that the bear market to the absolute cycle low from 2013, the high right at the end in December of 2013. You can see that the bear market lasted about 410 days to the absolute low of that cycle. Where if you compare that to the bear market of, you know, from the end of 2017 into the end of 2018, it was 363 days. So there's a fairly reasonable percent difference there, and that's where I think my I guess educated guess on why this high point in the cycle can really vary significantly is that, you know, FOMO is ridiculous. You know, people just everyone's grandma starts panic buying, and it's anybody's guess you know, when I guess some whale is going to decide enough is enough and dump a bunch of their Bitcoin on the spot market and you know, cause a rapid drop that I think then scares enough people to stop buying, and then, you know, slowly people start selling. So that, like I was saying, that the peak, it's very hard to predict the timing, but we can get an idea of what, you know, how we can parameterize sort of an early and late window for that timing. But with some of the more important dates, like I was saying, the two most important to me are the absolute low of the cycle when that occurs, and the retest of all-time high. You can see here it was around January 3rd of 2017, and much more recently we retested the 20,000 all-time high around the 3rd of December 2020. You can see I have them circled here, the duration between, and I have these lined up on the exact low and the exact day of the retest. The timing between those two dates was 722 days in the prior cycle and 717 days in the current cycle. I think that's just a good way to look at that. So it's hard to say exactly where the all-time high falls, and and I somewhat believe that we might be in a lengthening cycle. It actually makes a lot of sense from an adoption standpoint. And as much as people think that Bitcoin is the most ridiculously volatile asset anyone's ever seen, it's definitely becoming less volatile over time. The percent changes day to day and week to week have become much more muted, much less extreme than they were in the previous cycles. I mean, just a quick example of that is you can see here. Actually, I have a better chart for that. I'll save it. But some of these oscillations that were happening back in even 2017 were.
Let me ask you something real quick. As you kind of mentioned your struggle with a target for the top, and as we're talking timing targets, not price targets. I'm curious to hear what you think of mine, which is December of this year. From my studies of prior market cycles, we have seen a lot of tops in December, and specifically in Decembers that are roughly 18 months, about a year and a half after halving. And that has been basically the most important thing to me throughout the last few years, is what happens leading into December of 2021 and what price that gets to. I can definitely give you some guesses, but the time is what I'm mostly confident in. So tell me if that's anything that you have looked at as that December, about a year and a half after the halving, and if there's a reason why you're not having any confidence in that at the moment yourself.
No, and I 100% agree with you. That has, for a few years, my target has been I think December 7th, or the first week of December of 2021 has been my target for a long time. I can't even remember enough to give you all of the reasons for that, but you can see here on this timing chart, and it's, like I said, it can vary, but if we were to match the timing as we did, the timing from the ultimate low of the cycle to the retest of all-time high of the cycle, that matched very well from the last cycle to this cycle. So if we were to assume that the timing from that absolute low to the all-time high of the cycle matches, you can see here it was 1,068 days. And on this chart, I have projected that forward, and a perfect match would actually fall on the 17th of November of 21. But I've looked at a lot of things that point to December, not the least of which is that we could, there is something. It's like everybody talks to their family during Thanksgiving or something, and it pushes that last bit of FOMO. December does seem
actually what I really think that it is that everybody that doesn't take profit, what I've noticed, they give one reason, and it's taxes. They talk about, I'm not paying my taxes, like the taxes, like the taxes on this. I'm just short-term capital gains. Yeah, like one way or another, the reason that they give is taxes. And whereas the people that actually do exercise on profit, they just do it, kind of going into the end of the year with the understanding of, yeah, I'm just going to pay my taxes and be very happy with what I have made. And then kind of after the year ends and the market dumps, and it, all of a sudden people are looking like, oh, well, at a value where they could have paid their taxes and still have what they have or something. Yeah, I really think that it comes down to people looking at the end of a fiscal year, and those that are just willing to buck up and eat the taxes are, like that for me, at least, when I'm really at that decision point of, am I really going to take this money off of the table, that last decision is, holy shit, am I really going to pay these taxes? And
Yeah.
And that's what I find people talking about at the end of the year. So I do agree with you that that's a conversation around Thanksgiving and Christmas and that
Right.
sort of stuff. But I personally think that it's really the tax factor that is most important.
Yep, and I agree with you. I think you're right. That is probably the most important. That and the timing from the halving, like you were saying. Unfortunately, I don't think I have any charts handy that are using that timing. I probably should have the halvings on this chart, but I'm trying to keep it from getting too overcrowded. But I definitely agree with you. I think the end of the fiscal year and the the taking profit before before the next year and having to worry about the capital gains tax versus short term versus long term. I think that's probably, you're right. I think probably the biggest factor why these markets tend to top in December, and it is convenient that based on the last cycle, especially from that cycle low to the high, the exact timing of that from the cycle low of the current cycle to the my projected date, it falls in mid to late November. So, that I could easily move that into December. And, it's not really, on the scale of things here, it's not a big change. Of course, when that extreme price change is happening, like it tends to, and that's exactly why timing is easier to predict than price. When these things are completely parabolic and increasing on enormous percentages per day and week, it's pretty hard to pick out an actual price for a top, but the timing is definitely easier. And I totally agree. I think the end of this year is what we're looking at. I think there is a chance that we repeat. I think there's a chance, like Mark Wood was saying yesterday, I think there's a chance we repeat some kind of behavior like we saw back in 2013, and maybe have a longer consolidation, which I think could push us into next year. And so I do have, in another chart, I have some targets that fall at the end of 2022 also, but that's much more speculative. I totally agree. The end of this year is where we're looking.
All right. Well, I'm glad to hear it. I was mostly hoping that you weren't going to be giving me a good argument that talked me out of what I was already saying. So
yeah, no, I don't have a good argument. Nothing strong. I think the biggest, the most likely scenario is the end of this year, I believe. Here's just another quick chart to that sort of reiterates some of the importance in the timing. That the timing of the break of all-time high, I think, really, you can see I have the arrows drawn here in white. That really, it's a critical date when you look at all of the behavior of price. Those dates are important. You can see here I just did a simple Fibonacci time zone projection over from the retest of all-time high all the way back in 2013. I guess that was February 2013, when I stretched that fib projection on time all the way to the retest of all-time high we had here around the 23rd of November or so of 2020. if you just look at these, and these are the default fib ratios, I could probably, Fibos could certainly probably suggest some better ratios or some more intermediate ratios, but
we got to have I mean, there's no other fib ratios than the default ratios, as far as I know.
Well, I think there are sort of it's like fibs of fibs. There are some, and there are some other Fibonacci ratios that, but these are your main set, right? The 23.6%, 38.2, 50%, 61.8, and 78.6. Those are the pretty standard.
Those are the ones that I'm familiar with, and yeah, maybe we'll have to get you and Fibbo on to talk, because I don't know about any next level fibs myself.
Yeah, I could be mistaken. Yeah, we should definitely ask him about that. But you can see here, coming from, and this is not based on tops. It's, for a long time I tried to base things on the tops, and it doesn't work. The fib ratios don't work. A lot of things don't, because there is some randomness to when that top finally turns around. But when you look at the break or the retest of all-time high, 23.6% of the way through that, from that point, is where it almost perfectly nails the absolute low of the cycle in 2015.
And I think that you made a good point there that I just kind of wanted to touch on. That is, it's been made a couple of times throughout our conversation, and it's extremely pertinent, and one that I just would like to clarify. Just state my understanding of, and share that with people, in terms of looking to identify and time tops versus bottoms. And I've heard it been said from a handful of people before, that it's a lot easier to time bottoms than tops, but I haven't really heard it explained too much better than that. And what Mr. Bernoulli's been talking about tonight has been very much touching on that, on I think a bit of a higher level, in terms of the tops will come from euphoric buying and FOMO buying, and there is no way to tell how much euphoria a market is going to have when it gets to a certain price and gets all over the news and this sort of thing. There's just, it's just kind of a question to see, like, how much euphoria will this huge bull parabolic market create, whereas it's always going to follow in capitulation, and the bottom is generally going to be defined by the value of the underlying asset, as as well as maybe some technical stuff and some longer term market cycles, which is, I think, just a good way to kind of explain why potentially bottoms may be a little bit easier to start to try to put a finger on than tops, and having that sort of understanding of, okay, I'm just when you get on the right side of a market that really starts going hard and fast, kind of just having that understanding of I just have no idea how far the euphoric buying could push this thing, but I am going to just try my best to stick to the technical tools that I have throughout the first and kind of second part of the cycle, and then on that kind of last part of the cycle, it's just mostly how much gravy is there going to be on top, and if it's a lot of gravy, then excellent, and if it's not much, then that's more than enough, because you already got the potatoes on the first few parts. So just kind of wanted to elaborate on the idea of looking to time bottoms, and then also looking to stay away from trying to time tops.
Yeah, I totally agree. And it's funny you said potato, because I was thinking while you were talking there about, what's an easy analogy for how hard it is to figure out how high price is going to go and exactly when it gets there. Imagine, it's kind of funny. I don't know. The simple real world example, if anyone's ever operated a potato gun, imagine if you had an unknown person holding a potato gun at an unknown but almost vertical angle, and you had an unknown number of people spray an unknown amount of hairspray into that potato gun, and then you fired it. You wouldn't know. It would be really hard to predict exactly how high that potato would go. It's, you don't know how much is backing that rise. You don't know how many people are going to continue to FOMO, how much hairspray they sprayed into the price to keep it going up.
That's a beautiful analogy, and as somebody who loves a good analogy, I'm definitely not the kind of guy who ever could have thought of an unknown amount of people spraying an unknown amount of hairspray into a potato gun. So now I've got that image in my head, and I got to say I really like it.
Good. I'm glad you like it. Oh, all right. So let's see and it is very interesting. I thought, though, on this chart, using the timing, and this could not be used for a future prediction, because we don't know back here when we're going to retest the all-time high after essentially 2 full cycles. But I do find it really interesting that that golden ratio, that 61.8%, pretty much perfectly nailed the high at the end of 2017. It's interesting. I can't speculate much about it, but I do think it's an interesting point.
Well, I think that there's the first thing that would be my speculation would be, where's the 1.618, and that it's probably a long ways away, which would lead me to think that, probably, even if it seems important right now, nobody would be looking at it at that time. And that 618, that is the golden ratio. And even though you couldn't have necessarily used it at the time, I guess in my mind, this would be the very first time that it ever could be relevant. And while I will probably long forget about it when it comes around, I think that it is something to, I'd be wanting to see where that 1.618 is at.
Yeah, and I definitely agree. And it's kind of hard to tell, because
the chart cuts off. It
doesn't show me the date, but I bet if I put it,
somewhere in 2025.
I think, yeah, here, if I put it on a monthly chart,
nice.
that falls in August of 2025.
Yeah.
And that would be not this upcoming market cycle top, but it's very possible it could be the next, the following market cycle top. And absolutely. So, quickly just speculating about some other important dates here, I think, and this is one of the several things I've looked at that I think there could be an important date at the, near the end, maybe September of 2022, could be an important date. We could be looking at not much of anything at all, like we see over here. Back in early 2016. But and one thing I've found with the fib time zones is that while one might catch a top and one catches a bottom, they will still be very relevant dates in the future, but it won't necessarily be it won't necessarily be a top or a bottom, but it's still a date to watch. And when you're approaching that date, it becomes much, as you get closer to that date, it becomes much easier to make an assumption about what that significant date could indicate, such as a top or a bottom, or a breakout from a smooth or a sideways trend.
This is I'm very glad that you brought that up, because I think it's the perfect sort of point to bring up in terms of if you really get into looking into timing cycles, and if you really do decide that timing is more important than price, like I kind of just asked people to, ask themselves at the top of the show, what is more important, time or price? And if you do decide that time is more important, then you're probably going to come to this realization that I have, and anybody else that I've talked to that uses timing heavily in their analysis, is that maybe you can identify some times that are really important, but at the end of the day, it really isn't going to tell you anything other than this is an important time, and probably that it's going to be something very different than you expect. And while that may sound like it just kind of becomes entirely meaningless and irrelevant, it's anything but, because, like Bernoulli said, as you get closer to that time, like if you just really feel like, December is a very important time for Bitcoin, and you don't know if it's going to be a major top or a major bottom, and you just, kind of think that something's gonna happen that I just don't expect, and I can't predict at all what is going to happen at that time. I just know that I need to be paying very, very close attention at this time, and being in ready position, being on my toes. If you can use that as the foundation for your analysis, from my opinion, like in my experience, what I've seen is now it kind of gives you a bird's eye view of this market where everyone else has their head just buried deeply in the sand, and like for sure nobody knows what's going to happen. But when most people's head is buried deep in the sand, and some people are at least looking at the beach and the sunset and being like, okay, this is a time where it is, I either want to set up on the beach and get a good tan, or get out of here before the storm comes in. You don't know which it's going to be 6 months ahead of time, but maybe a few hours ahead of time you can see, is it a bright and sunny day to get a suntan, or is there clearly a tsunami coming in? Whereas if your head is in the sand, that tsunami is coming in, and it could be clear as day, but you just can't see it because your head is in the sand. So there's my analogy.
Yeah, I totally agree. And that's where, it becomes, if you're overextended to the upside or the downside, when you have an important date, you can know to be ready on that date. And that's what I've gained out of these charts. And if you're overextended to the downside, it's likely to be, a reversal to the upside, and vice versa.
Absolutely right. And that's you summed up what I was trying to say in very few words. And that what does Bitcoin do? It gets overextended one way or another. And if you can start to identify some times where you are expecting it to really become overextended, then that can provide a huge edge. Because like for me, when Bitcoin was at 18,000, I thought it was overextended. And when Bitcoin was at 24,000, I thought it was very overextended. But the only reason I was able to just kind of accept the reality that was in front of me was because it was nowhere near the time target that I was looking at. And that's kind of the edge, I guess, that I'm maybe trying to describe. So well said, and I'll let you keep going.
Yeah, and actually, regarding that, I see so many people that, on Twitter and elsewhere, so many people keep thinking every time we have a correction here in the cycle, everybody thinks it can look like what it looked like right at the top of, at the end of 2017. And everybody keeps panicking, and everybody keeps worrying that it drops $10,000 in a day. And the thing is, realistically, if you go back in time, you have to realize you have to look at this in a percent rise and fall from a price. You can't look at the dollar value, because of course it seems obvious or absurd that it's like something awful is happening if it falls $10,000 in a day. But at this point, it's still the percentage moves are actually really similar. And this part of what I look at with the cycle behavior, it gets more speculative on price and things, but it does, it can really help keep you centered on the reality that we're not that far in, we're not even halfway into the bull cycle. And a lot of people define the cycle as starting at the absolute low, and I really kind of define the cycle as starting at the break of prior all-time high. That's where you get a whole new cycle behavior, and at least based on the data that we have so far, that's how it has played out. And I mean, you can see here, this is back in 2017. We rose, just looking quickly from the break of the all-time high to the first real correction. It's about 137%. And if we look at the current time frame, and I don't have that on here, but the current time frame from that break of all-time high to the first real correction, all right, it was about 112%, but it's within a margin of error. It's very similar. I believe this correction that we had was fairly similar. The behavior during that correction was very, very similar. And there was actually a stream I did with Joe Saz when it was like right in this wick. It was in one of these two wicks, and I went on live with him, and I was discussing it, that this is totally normal behavior for the Bitcoin price. There's nothing unprecedented. There's nothing weird about this at all. If you just compare to what it did the last time it broke all-time high, it went up, 137%. This time it was 112.
Well, actually, let me even take that a step further, in that what's been abnormal for me in this market is that we haven't seen a 40% correction yet. And that was kind of an earmark of the prior bull market, was that we would, get, when we got big corrections that really scared people, it would go down about 40%. And that is the type of thing that it can't repeat itself for too long. And you kind of wonder what may be different next time. Maybe it
Right.
just keeps only correcting 40% and exactly in that range with the margin of error, or maybe it does a little bit more or a little bit less. And the fact that we are, seeing big dips that are scaring people, it is different to me, because we're not seeing as big of dips, and that is a big signal of strength to me. If Bitcoin's getting bought up significantly quicker than it did on prior cycles, then that's a big deal. What do you think about that?
Yeah, and I agree with that. And I wonder, we know that we've got institutions buying Bitcoin, and buying a lot of it. And when there's also, a lot more people have exposure, a lot more big money has exposure, and 401ks and things through Grayscale, for example. It's become much better known. That there is the only way the market cap can move like it has is for there to be an enormously larger amount of money flowing into the market, and that clearly is happening. And you can see here I've got marked out. I know it's probably a little cluttered and hard to look at. The first, we went up something about 137% from the all-time high, and we corrected about 36%. And then we had another bottom about 37% from that first drop. It does seem in this cycle that the drops have been more muted, less severe than the last, but they're still comparable, I think.
Well, they're comparable, but to the stronger side, like where you were talking about saying that we haven't seen anything unprecedented. If anything, what we have seen that's unprecedented is more strength than we have ever seen before.
Yeah, I completely agree. It's stronger, and it's if you just look at the percentage drops on these corrections, it's actually less scary than it should have been in 2017. You can see here the second correction was about 40%. This is what we
should see with if we are to get an S curve adoption, which either this is a complete tulip bubble and it's going to zero, or there's an S curve adoption where we get less and less significant bubbles and volatility gets less and less over time because the market gains liquidity and there are just more market makers and going to be fighting over the spreads and that sort of thing. So if we really are moving towards the right path, like it's an A or B for me, and if we really are moving towards mass adoption, then what we have to see is basically similar sorts of gains, maybe with a little bit less time after time, but most significantly is less dips, less significant sell-offs, because that's what really defines the value. The FOMO buying at the top, that does not define the value. That's just tells you how many people are left with money to FOMO buy. The value at the bottom during the scary sell-offs, that is what defines the value. And if we are getting less and less significant sell-offs in terms of percentage, which is another thing that you brought up that's very important, doesn't matter if we saw 10,000 in a candle, if that's only 10% or 20%. What matters is how much percent are we bottoming at? How many people are really stepping in to risk real money for this theory? And if more and more people really are going to be stepping in at a 30% correction instead of a 40% correction, to me, that's basically the most important thing. That's more important than a new all-time high. I mean, that's really hugely significant.
Yeah, I totally agree. I think it is significant, and I think we have time to go in this cycle before we're sure that we're not seeing those same kinds of corrections. But a quick example here is, when is this? What is that? April of 2013. April of 2013. I think is that 3 days? I mean, yeah, from the top in 3 days, Bitcoin fell 82.6%.
Yeah.
And of course, that was only $214 at the time. But when you're only at a price of $262 and it falls to $44 in 3 days, and people think it's scary now. Usually that just tells me they haven't been in Bitcoin that long. It's because it has, with each subsequent cycle, it has become less volatile. Here 36% compared to 82%, and we did make it to, that was right around that all-time high party, I believe, in earlier January. We pulled back right about 31%.
Yep.
And that so that move was fairly similar. I think, like you were saying, I think it's entirely possible that from the high we just had, the second real correction we had in 2017 was 41%, and so if we assume that correction is happening now, because we are getting some kind of correction, and this is just to keep your bearings on the market. It's these prices don't mean that much of anything, but I could see this playing out if we do continue to trend down here, maybe for a month or two, and we make it into let's say a bottom in March, and we move down 41%. Well, that would take us right to the $34,000 area. Find some good support here above the lows that happened after that first correction. That's entirely possible. Or another scenario is that, like what happened in 2017 was, it actually went down 41%. It came down 41%, but it really only bottomed out at the top of the prior correction. So, and that would only be a drop of 28%. And it's possibly a more likely scenario that I see here. But like I said, this is all fairly speculative, but I find it helpful for myself, at least, to keep perspective on the market, just by looking at these things. It's like, so, that would take us to about 42,000, 28% drop. Or it could be like the last cycle and we get a 41% drop and it takes us down to 34,000. Either way, I'm not worried, because because the timing of the bull cycle, from when you look at the timing from the break of all-time high to where we are now, I mean, we're only what, like 80 days or something into this cycle. And if we look here, what the 2017 cycle lasted, from the real breakaway from all-time high to the top, 246 days. This could happen faster or slower, but until we're at some more than 50% of the way there, I don't think that we need to worry about this being the cycle top.
I completely agree with you, and I am glad that you touched on that. As when we look back on historical stuff and show where things worked, and it's like, wow, that seems like it worked great, but what can it do for me now? And then you show something that's probably a bit hard to believe for a lot of people, in terms of right now we are a very short way into the current cycle. The last one was 246 days, and this one is just it's a newborn. And if we're talking about a bull market, going from 0 years to 18 years old, we're looking at like a 6, 7, 8-year-old market, and it's very fresh, and we have no idea where this could go, or if it could completely just fall apart from here. But the most important thing for me, when we talk and when I'm looking at this stuff, is, are you continuing to stick to the analysis and during a time where it may be hard to do so, especially during a time where it's hard to do so. And right now, it's throughout, as we've watched Bitcoin go from $4,000 to $58,000, it has been very hard for people to rationalize how this is real. Like, how did this just happen? Is it, is this the top? Is this what is going on here? And in that environment, that's where I myself, when in doubt, zoom out and look at these very long-term charts. And when I'm done looking at my own charts, I'm interested in seeing, other people who have similar approaches, looking at similar long-term charts. And then from there, it's just kind of, a question of seeing how relevant this remains in very uncertain times, which this most definitely is. And it was just, I like you come to the conclusion of how early on you think we are in this bull market due to the timing target that you have. And that is very similar with how I'm looking at things right now myself. And, we may both be entirely wrong, but at the end of the day, we're, kind of here in this uncertain environment, just sticking to what we got, and we're just going to see what happens next.
Yeah, absolutely. And there, I've done a lot of, I look at a lot of things, what could help us better time the all-time high. Maybe this is something I've looked at before. Maybe a good method is from the first major correction in a bull market. If you compare, it took like 231 days back in 2013. There's only 202 days from the first major correction there to the all-time high in 2017. And, so if we consider that correction we had in early January, and we say from there, and we sort of interpolate that, it increased, or it decreased by about 30 days less to 202 days on the last cycle. So maybe we get 170 days or so. And it is possible that we top there, and that is about the earliest top that I could see in this cycle. I don't think that will be that early, but I think Mark Wood and I are on the same page there also, is about July. July is really the extreme earliest that we could see the absolute cycle top in this cycle, based on any prior history or any historical patterns. That's and I do want to reiterate, I think that's unlikely, but at an extreme, it is a possibility.
And yeah, just a perfect way to kind of sum up what we've been talking about. And as we are getting on here with the stream, we'll wrap up with kind of what you are expecting, is most, like what you're most expecting. But what you said there was a great way to kind of sum what we were talking about with the timing targets. And for me, July is also a very important time for Bitcoin. And we don't know what that will be. Historically, in bull markets, like July 2017 was a really good time to buy Bitcoin. And if we, have some really good, solid FUD in July and, a nice sell off, whether it be 15% or 30% or 40%, it will start to really look like it's time to get our towels out on the beaches and buy some Bitcoin and hope that we didn't misinterpret the weather report. But if it's just all of a sudden at 200,000 in July, then this date that you are looking at as being very significant and being the earliest time that you would look for a top. If we are really rallying hard and experiencing a lot of FOMO in that month, well, now, it becomes that time to wrap up, put away the towels and get out of here before the tsunami hits. So I think that was just kind of a good way to illustrate what you were talking about in terms of identifying a time, but just not really having any idea of what that may mean.
Yeah, and I've been working on some ideas to maybe get a price. I did a lot of sort of interpolation of percent rise in each cycle, et cetera, over the last couple of years. And what my target for a long time was about 146,000 for this cycle. I think based on how fast we've come up, I think that's a little more conservative now. But I actually just started working on this chart, and I believe Mark showed a chart yesterday that was fairly similar to this, and that this is something I've been working on. That's it's very similar to that, and it just uses the 200 simple moving average, and it's really just offset. And so this is pretty speculative, but you can see it. I catch the top here pretty accurately in the 2013.
When you say it's offset, what is that? That top one, what is that offset by? How is that calculated?
It's calculated. I've been writing PineScript to offset these. It's really just a drawing, sort of. It is, but it kind of, I think, helps put the market in perspective. I know Mark has been more.
Sorry to interrupt, but when I think of it being offset, what I'm thinking is if the 200 moving average is 20% below the price, then offset 200 moving average will be 20% above the price. Is that kind of how it works, or is it different?
Yeah, and it's and you might be able to see here the colors change. The best way that I've found so far to hit to find the points in this curve that are significant is the general 200 MA we know has been historically a pretty good indicator of the bottom in the bear markets. The 200 week, I should clarify, this is the weekly 200 moving average. And all I've been doing, and I kind of hate how PineScript works in TradingView. I've been writing code that offsets. And it's a little unclear how it works. It makes it even more complicated that this, really has to be done on a log scale chart, because it's pretty much impossible to look at on a linear scale. But what you see here, you can see the color changes that happen here. And that is, it's offset by 50 weeks back. And then each one of these, because this is log scale, they are each offset a different by a multiplier.
Okay. So kind of like the Mayer multiplier.
That is really exactly what this is. That's pretty much exactly what it is. I've just been kind of working on my own indicator, my own version of it.
Okay, that makes sense.
and it's pretty interesting here. And I got these last couple lines on here today, and this is a work in progress, but I think people like charts like this, so I thought I'd show it. Everybody wants to know where the price will go. And it's interesting, and I'm sure most people are also familiar with the logarithmic regression curves. And I like this one a lot. And I know Mark showed something like this yesterday, fairly similar. But you can see this top curve, it actually lines up with my multiple of the 200 MA. Here's my November target, here's the July target. The November target lines up with that log curve. I mean, it's pretty close.
Yeah, it's right in that range I'm looking at myself.
Yep, and that's that comes in. That's an area. The 140,000 area is somewhere I've been looking for a long time. If this cycle is getting longer, which I think there is merit for that idea, though I do think it's really pretty much defined by the halving. But say it comes a year later, in that case, we could be looking at as high as $230,000 area. And I marked on here also, just as a note, I like the stock to flow models from Plan B. And I know his latest model shows a price of about 288,000. So I quickly, before the stream, threw a curve on here that would show where that would fall. I'm not expecting that, but I will not write it off. It is entirely possible. But it's not my conservative estimation. But and if you looking here, we really corrected below the white curve that I've drawn here. In 2013, we corrected once, but then we got above that curve in 2017, and currently we got a little bit higher relative to this correction. Let me make this a little bigger. It's probably terribly hard to see. In this area here, we corrected below the blue line, which turns green here. We actually made it all the way up to the next line. And we've really only had two significant corrections. So I won't write off. This is all speculation, but some of these kinds of things can make it much easier to get your bearings and see where we're headed and where we've been. And I wouldn't write off the possibility that, we do come up here and top in the $288,000 area.
I love it. And yeah, that's very similar to what I'm seeing. And it's something that, I love to see stuff that's looking at, very similar prices and times as I am. And on the same hand, I'm kind of not wanting too many other people to be looking at those same prices and times. So it's good to see that that the analysis that I have been using, which is very similar to yours, has been coming to same conclusions. And why don't we go ahead and wrap up by you kind of walking us through those lines that you have on that chart? As it looks like you've kind of got a bit of a path lined out that you.
Yeah, sure. So I forgot to mention the one other example. If we were to compare the percentage rise that we saw in 2017 to the current situation, where that would actually land us, and I don't expect us to get there, but if it was to match perfectly, which is an interesting concept because, and I didn't get a chart together for this. I've been trying to figure out in TradingView. I think I'm gonna have to export data to MATLAB and actually to get sort of a percentage rise comparison of each cycle. Because the thing is, we are behaving differently than we have in the past. Each cycle has increased at a lower angle. And I will publish something when I get it, and maybe we can come back on and talk about it. But we are matching the percent rise of the 2017 cycle. We're matching it almost exactly thus far, which is different than previously. So if you want to be really optimistic and psych yourself out, it's possible that we could make it as high as the perfect percent match would be, I think 332,000 would be the top if we perfectly match the 2017 cycle. But I don't expect that.
Well, I guess I like hearing that those targets that are hard to expect or believe are often the ones that I am most intrigued by. And I remember now one of the main questions I was asking people at the all-time high party is what's the highest high that you think that we'll see on the next top? And why I was asking that was because I wanted to figure out what is the highest number that anybody has. And then, I wanted to be kind of starting to think higher than that myself, due to the fact that I don't know anybody at all that was looking for 20K on the last run or anywhere,
Right.
The highest call that I could think of finding in the last one was 10,000. Like that was the pie in the sky dream number that it just completely blew right through. And I'm convinced that the markets are driven by disbelief, and the numbers that are just impossible for the majority to believe are the numbers that it's going to go to see what are you going to do? Are you going to buy, sell, or do nothing? And so when you're talking about those highest numbers, as I don't want to be trying to if we get to 150K, I'm not going to be looking at those numbers to be like, yeah, you need to be waiting for this to sell. But at this time,
right.
in my mind, I'm going to be thinking, okay, what are the numbers that nobody else is looking at? And anybody that looks on my trading view can find my target, which is 400,000, and I am feeling like that isn't just a price that is a complete opium dream, target that's just maybe in the best situation, Pleasantville, this happens. It's actually a price that I'm thinking very few other people are looking at levels this high, and that historically nobody has been able to start to look at the prices that we have gotten to, and that everybody tops out at these psychological levels. Maybe it's 100K, maybe it's 250K. And that's, something I'm not going to be telling anybody to wait for. But in my mind, I'm not going to be looking at these numbers. Everybody's talking about 1 to 2. And for me, it's either like not getting to 1 or it is going very well through 250. That's just how my mind works.
And I agree with you. And I think that the one thing we know about Bitcoin in the past is every time it goes up, people think they have an idea. They think they know. I mean, what Tone's target, I think his initial target, I think was around like 7,000. It was reasonable. And it sounded crazy when we were at like $100 that it was going to go to 7,000. And then, it went to 20,000. And every time it seems to really blow away people's expectations, and people get out early and then they FOMO back in, etc.
Exactly.
Go ahead.
No, exactly. You're right. It's the fact that it's got to get to that point where you're not going to sell. No way. You're not going to sell. You're not going to sell, and then you finally do, and then it goes way higher. And that's by it going higher will cause most people to lose money, and that kind of stage tends to happen so fast and so quick. It's in a blink of an eye. And it's something that I just try my best to kind of, like you said, give a framework, get an idea of times and maybe some prices, and just try my best to be mentally prepared for things that I can never expect, while not trying my best not to get sucked into that kind of head in the sand sort of situation. That the market is just the market is a absolute professional at getting us to detach from reality, and that is the thing where we're at right now, talking about 200, 300, 400,000 Bitcoin. Like, that's detached from reality right now, and that's kind of like I need to do that myself ahead of time, otherwise it will detach me so much from what is actually happening that I just won't be able to do anything. I won't be able to get my finger to push the mouse button to click sell because I'll just be fucking paralyzed like a deer in the headlights.
Absolutely. I guess we can end here on one more bullish note, just something that caught my attention recently. I had actually, this is a new chart, but I had opened one of my old charts where I'd, drawn trend lines on, because we had such on a log scale. So in reality, these would be like parabolic curves, but on this log scale, they're straight lines. I had some lines drawn.
Very, very quickly switch it off of the log scale so people can see what you're talking about with that in reality, because it's something that, and then zoom in a little bit. Hopefully we can see how it turns to a bit of a curve. So yeah, just right there, how we see how much that changes after.
It does. I wish that TradingView would make it so that when you put a line on a log chart and make it linear, either way, if you switch between log and linear scales, I wish that they would make it so that the line would stay but become a parabola. I think that would be an amazing feature. So
I agree. Absolutely.
So but we can see how absurd the scale is here. And I think a lot of people look at linear charts and they think it's like, you look at this, and I remember, back in 2013, 2012, I was sitting there looking at the tiny bit of Bitcoin I bought at the time. Hindsight is so enlightening sometimes. But you can see how small these bubbles actually were. But when I do have these anchored onto these points, but when, you can see how extremely different it is in log versus linear scale. But we can see here that in reality, these would be curves on the linear scale. I really didn't expect us to get back above. You can see, for example, the yellow line, it was resistance. You break through resistance, it flips, becomes support. It became support it was from 2015 all the way into 2017. For all of 2016, it was support. We pulled away from that line, we fell back, we broke through. Whichever one of these lines you use, they're not terribly dissimilar. It was kind of resistance in the bubble in 2019. And I kind of, for a long time, back in the 2017, 2018 time period, I had drawn those lines back then, and I thought it was unlikely we would ever get above those lines again. Currently, we are back above those lines.
Is it like not only was it unlikely, it was just like damn near impossible to believe, right?
Yep.
I mean, you just couldn't. Yeah, when you looked at how much these lines are progressing and where Bitcoin is at 6,000, 3,000, 5, 10, like it's just you can't believe that it would get back above here, and here it is.
It's true. So I quickly, while you were talking, I sketched this 400 area target on here, and the thing is, when you look at this chart, it's not that much more unbelievable that we do make a peak like that, and I wouldn't write that off either. My estimate, I'm just trying to be conservative, but really the best tool we've got, to reiterate again, the best tool we have is to time the time frame of the all-time high. I think between from July to December, for me, a little more emphasis on December, I think, is where we want to look. I think that's much more accurate than any price prediction I could give.
I love it, and I really appreciate your honesty and your willingness to share, exactly what you're seeing, without calling yourself an honest Bob.
Yeah, you got to watch out for those honest analysts. You
really do. I'll tell you what. That's you've really gone wrong in life if you're listening to people that call themselves the honest analysts. So. That's great stuff, and I think that I will say that I really appreciate you being conservative, and from my experience, the people that are making money are the ones that are generally having the disbelief on the conservative side. They're just kind of looking at stuff that, 200,000, that may seem crazy right now, but still is maybe more on the conservative side of what a lot of people are looking at when they're looking at these longer term things. And if you are consistently, waiting for that moon that has happened already, if you ask me, but somebody else who isn't, being as conservative with their projections or targets or goals or ambitions, just is always looking for that grass that is greener on the other side, whatever the case may be. And I just kind of want to clarify that when I say 400K, like in my mind, as much as I hate to admit it, as a former, as like a risk analyst, basically, I feel like I'm being conservative with the 400K because this time really is different in my mind. And there are a handful of reasons why. And we've had a lot of Bitcoin bull markets before and a lot of insane parabolas, but we've never had Bitcoin during money printing. Like it's just, there hasn't been trillions of dollars printed in the world while Bitcoin has existed. And for me, that simple fact is tells me that like maybe this parabolic channel that we're looking at is fucking done, and is done because we're going through it to the upside. Because when you're in this sort of trend that's like a multi-year, a 10-year trend, what is in motion stays in motion until an equal or opposite reaction occurs. And what could happen that would cause Bitcoin to leave this long-term parabola? It would, in my mind, be two things: like a halving going through without it actually having, or like Bitcoin getting hacked, like something actually fundamentally happening with Bitcoin where it is tomorrow no longer what we thought it was and all believed in that it was. Or the other side, that's the downside, where we break it to the downside. What could happen where we possibly break it to the upside? We do something where the dollar becomes so clearly invaluable that even I posted something, it was shortly after the money printing, it was a UFC fighter that posted, it was like, he said, oh, if the supply of USD is infinite, then how does it have any value? He just posted that. And I retweeted it with the comment of, if a UFC fighter, a person that gets punched in the face for a living, understands that the US dollar has no value, then, what are we waiting for this thing to completely collapse? So in my mind, this time is different, and it's different to the upside. And when I really go to sleep and I just close my eyes at the end of the day and I think about a 400,000 Bitcoin, I think that, that is very conservative. So I just wanted to say that I really appreciate you being conservative in your estimates and being very honest with your analysis. But I wanted to also share that while I'm trying to do the same thing myself, I'm having trouble to bring my head away from these very big numbers.
Yeah, and I agree with you entirely. And I'm looking at the data we have, and the truth is, the data we have is not that extensive. It just hasn't been that long. What you mentioned earlier, the S adoption curve. I've been looking into ways I can make some charts with that. Because that is a real thing. It's a proven natural behavior of adoption of any system, and it's definitely something to look at. I'm really just trying not to be too optimistic, but I think there are an enormous number of reasons at this point to be optimistic, and just some of the symmetry that you see in the chart at this point, and getting back above that last trend line that I showed, I think does show that the behavior is different. And I will be, in the fairly near future, I will be publishing some charts that show that the rate of change of this cycle has matched or even outpaced 2017. And that's a little bit of a game changer. And that's probably due to the buying going on from the institutions. And, that has really only just begun. I think they're realizing, they need Bitcoin on their balance sheet as a hedge against the absurd money printing and the inflation that is fairly inevitable at this point.
I couldn't agree more, and certainly very much appreciate you sharing your thoughts, as it's it's things I've talked about in terms of there's a very big difference. There's the world of difference between somebody who is eating Cheetos in their parents' basement and putting $500 into Bitcoin, and somebody like Elon Musk coming out and saying, I am putting my company's, a portion of my company's reserves, I'm taking out of US dollar and putting it into Bitcoin. Like that is like, that's it. Like that's it. And we do want to do our best to, stay in touch with reality and not get overexcited and not get, over enthusiastic about anything. But in my mind, what I was waiting for in 2017, when is Wall Street going to see what I'm seeing? And if they never see it, then clearly I'm wrong and they're just smarter than me. But if they do eventually see what I'm seeing, then I'm right and I'm early. And once that happens, I mean, the bottom line is there's more than 21 million millionaires in the world. In other words, if every millionaire in the world wanted to own one Bitcoin, couldn't happen.
Yep, it's not a lot. It's impossible.
In the world wanted to own one Bitcoin, they couldn't do it. So if smart money really starts to, buy into this, then it is this old log curve that we're looking at, kind of how you zoomed out, seeing these little blips, looking at if this goes to 400, it's just kind of another little blip. I mean, if
and that's how log regression works. Also, when you look at that curve, that curve is only based on the data we have, and it might project something about the future. But I think there's I just saw Mel posted in the live chat. What's the internet adoption curve look like? And that, I believe that follows one of those S curve patterns. And that's, I'll be working on charts like that in the future.
I'm glad to hear it. So yeah, definitely shout out to Bitcoin Bernoulli. Follow him on Telegram, on TradingView. He's posting a lot of great charts. Bernoulli, the title of the show has the spelling in that. And if you don't know how to spell Bitcoin, then GTFO. So check him out, and I really appreciate you being so one of the things that I really like so much about this space is how many people I've come across like yourself who just have something that is working for them and clearly allowing them to make a difference in their own life, make some money, and then to just come out and just be like, here it is. Maybe 5 people see it, maybe 5,000, maybe 0. Who cares? It's just here it is. That sort of mentality is so unique, and it's just what I really am attracted to myself. The people that are just doing shit themselves and then willing to share what they're doing without being afraid of that sharing, taking away from whatever it is that they're doing. Like that is something that's really rare, and I couldn't thank you enough for being that person who is going to continue to analyze this macro market with a very fine-tooth comb, because that is also something that is very hard to do, and it will, I'm sure, help more people than at the end of the day.
Yep, and thank you for having me. So ever since I first met you and Joe and some of the other people we know, it's nice having people that actually appreciate what each other are looking at. So thanks for having me. It's been a good time.
Absolutely. And I did mention meeting you at the all-time high party, and I wasn't thinking about actually originally meeting you in Vegas at Unconfiscatable last year, which was an absolute heck of a time. But we didn't really get to know each other. We met and we exchanged casualties and whatnot. But we, in my mind, I didn't know Bernoulli until the all-time high party. So I wanted to clarify that I certainly didn't forget that or anything, but wasn't thinking about our original time we were acquainted when I originally introduced you.
Yeah, definitely.
All right, buddy. Well, cheers. And I would definitely like to have you back on again as these longer term charts, I think, will become more and more important. And there are, just in my opinion, not too many people that I personally consider, that I follow myself, and those that I do. Like you had mentioned earlier, Plan B. Shout out at 100 trillion USD on Twitter. Big fan of his myself, and very much keep his analysis, in my mind, and while I'm blocking out most other analysis. So those of you that are, contributing stuff that help me kind of try to wrap my head around these markets, I very much value, and would very much like to have you back sooner rather than later.
Definitely. Yeah, I'll get some more charts together and I'll let you know.
All right, sounds good. And thanks everybody for tuning in. I will be back tomorrow with a normal daily alpha analysis stream. And last shout out to Bitcoin Bernoulli. Check him out on TradingView, and make sure to leave him a nice comment in the chat or in the post stream comments section if you enjoyed anything that he had to share. All right, cheers.